We are here, we are here, we are here. On this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up EUR, CHF. We are on a 12-month time frame. Price action last candle to right hand side. It's a bearish doji cross. So we do have price action made it down to an area of support. So we're going to place a zone around that area. So that market is consolidating within that area until that market breaks out. We can also see markets start off at a high and it pushed down to that area. And we're going to add a midpoint in the middle for price to return to before pushing up to the next level. So current price is sitting at 0.98875. So if price pushes up, it can tag that resistance line in black, and that's near the numbers of 1.00222. If price pushes up further, it can head to the midpoint between the SR lines, which would be near the numbers of 1.25301. If price does push down further, it can head down to the bottom of the zone, which would be near the numbers of 0.90445. So if this market pushes up further, where is it coming from? So we can see that price came down from a high, did spike that zone area multiple times, as identifying as overall first, second, third. And we receive a bullish green candle, start pushing out that zone, and we see the break and retest out that zone. Markets create that W formation. Walking down to then the market pushes down further, it'll identify a break of the zone that we're looking for the market to retest to push down further. So if we see where that market's coming from is a break, retest, another push down, or we can receive that consolidation within that zone area. Walk it down to the 6-month time frame. So price action on the 6-month time frame is reading as a bearish red doji cross. So it's indecisive. So market's consolidating side by side within that second last candle in the market. So we're looking for a breakout towards that second last candle. The second last candle is a bearish red candle, spiked down to a low. So that market is identifying that market came to retest the bottom of that zone. It could be working its way up. But then that third last candle as well has spiked that high as well. So as we walk down the time frame, the second and the third last candle will identify as a huge doji cross, but that market is still consolidating. So we're going to see if that second last candle is respected. If so, we'll see that first, second, third, fourth, and that incline W formation, which means that price action will be the retest for the following market to push up with a bullish green candle. Unless it's identifying the break, the price action could be the retest and follow up with a bearish red candle, work its way down. And if it's going to work its way down towards the bottom of that zone, it will be engulfing not just the price action candle, but the second last candle body and wick to work that market down to the bottom of the zone. Working our way to the 3-month time frame. So price action 3-month time frame is identifying as still a bearish red doji cross. So that market's indecisive side by side with the last few patterns in the market with price second and third. So we are receiving that consolidation. So we can see that the market is reading that it did break into that area that we just created, that box with the last 3 candles, and market spiked up back to the top of that box. So it really just tagged the midpoint of the box and it came right back up. So if we put a midpoint line there, we can see that market spiked the midpoint and still pushed up. I should say spiked the bottom, but had a nice support stop with the green and red candles towards that midpoint before trying to work his way up. Walking down to the monthly time frame. So price action monthly time frame reading as a bearish red doji. So we can see that market's in that zone. So we have some type of pattern that's trying to form in this area. So we have a multiple spike ups to the high, which pushed that market down to that area. which identified as the break and the retest. So we have that first, second, third, market push down for that double top, and then retest once and then pushed up further. So now we can see that W formation. And the reason why that's W's formation is forming is because the price second, third, fourth, fifth, the sixth to last candle in the market has created that area of support with the price second, third, fourth to last candle. So the fourth and the sixth is creating that W formation to see if that market's going to push up. But so far we can see prices tagging that midpoint area. So we can see markets in the zone. It's a zone inside the zone. So market did respect it, tag that support for that first, second, third, fourth, retest one, retest. We're going to see if it's going to push out, but price action is reading as a bearish red candle spike up to the high. If it follows up with a bearish red candle to work that market back down to the bottom of that black SR line we created before breaking out, if it does break out, then it'll identify as the break, the retest, and the market pushes down. Working our way to the weekly time frame. So price action weekly time frame reading as a bullish green candle. So we have a market's trying to create that area of support within this area, but still within that range. At the top of that high, we are reading as a double top. So we have that first, second, third, fourth. So we're going to see if it's identifying as retest to push down further, which will be breaking out that zone we just created. If not, then it can be creating a structure to push up further. And we'll talk about that on the daily time frame. So on the daily time frame, we have price action as a bullish green candle. It's trying to create the pattern off this area to push up back up to the previous areas of multiple spike ups to the high. The structure that it's trying to form, and when it came down in red with the price second, third, fourth, fifth, the last candle of the market, it did create that first, second, third, and market's trying to push and engulf the previous price second, third, fourth, fifth, at least the price second, third, the third and fourth candles in the market. Price is trying to engulf that to create the double bottom. We'll probably see the break and retest. If not, just a huge bullish green candle to push back up to the high. Working our way down to the 4-hour time frame. So price action on the 4-hour time frame. So we see we are in the 4-hour time frame. We are in the zone. We have price action being a bearish red candle. So we're going to see if this market is going to be respected. So if we think about putting another zone in this area above this SR line, we can see that price is tagging the top of that area, and that's that area is within that consolidation, within a consolidation. And we can see that market did respect that support multiple times for that first, second, third, fourth, retest one. So we have a triple bottom. Market's retesting near the high of that zone. So we're going to see if it's going to push and break out. If not, market could be engulfing. If we receive engulfment towards the third to last candle, market's working its way back down. Working our way to a 3-hour time frame. Price action 3-hour time frame reading as a bullish green candle spike up to the high, like the second last candle, the market third last candle. So we can see that price second and the third last candle's wicks are spiking at high multiple times. So we have 1 touch, 2 touch, 3 touch. So it's up to 5 touches to that resistance line before breaking to the top side or breaking down to the bottom side. Sometimes you see 6, most of the time it's 5. So far we have 3 touches. It may identify as a doji to consolidate and then finally push up with that 5th or maybe 6th to last candle. If not, that market's coming down if we receive the engulfment towards the first candle in the market, which is price action. And market can engulf and work its way down, may identify a break and retest, which will identify a double top. And it'll be back into that zone collection of consolidating up and down. Working our way down to the 2-hour time frame. So price action 2-hour time frame is reading as a bearish red doji. So the market is identifying the multiple pushes, first, second, third, fourth, retest, 1 retest, and this is the push and breakout. And if not, we receive that engulfment, markets will start working its way down, as we said before. But so far we are looking for the engulfment towards the second last candle for that market to work its way up to the following level. Working our way down to the 1-hour time frame. 1-hour time frame, same as well. Bearish red candles, dojis, price in second. Still looking for the engulfment towards the third to last candle now in the 1-hour time frame. Now, market could be creating an area of support between the midpoint of the third to last candle before pushing up, unless we receive the engulfment into the bottom side of the third to last candle for the breakout, and we'll see that overall double top for that first, second, third. Market comes down. Okay, guys, this is Cam Jones, EUR. CHF.